Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been a roller coaster and one of the most important weeks of the year. And because basically the Fed has pivoted with a surprising move. We pivoted 50 basis points instead of the 25 basis points and are trying to support the economy. But since the move, we've been in the chopping and sending the S&P and the small caps to new highs, but the Nasdaq it's kind of struggling. I want to show you how the Nasdaq is not responding the same way that the S&P and the small caps and certain other markets are responding after the Fed pivot. And I will try to answer why this is happening. So let's first review the economic data on the week. On Tuesday, we got retail sales, pretty much everything in the positive. We are strong in the consumer spending, we are strong in the sales. So this is a strength economy, strong economy. So on Wednesday, we got the building permits, which are showing also a lot of strength. This is good. And then we got the jumbo rate of from 550 to 5, basically 50 basis points, and the projections were pretty solid. If you want to see the detailed analysis, I'm going to link you right now in the upper right corner the video that I have for this, in which I cover also the Fed press conference from Jerome Powell. I'm going to continue to Thursday to show you that initial jobless claims and continued jobless claims are basically cooling up. They are showing that the labor market is stronger than people even Fed thinks. So this is good because one of the reasons why the Fed cut that much is supposedly because of the weakness in the labor market. They want to support that. They saw downside risk to labor market. And on Friday, we had nothing, no news, but at the same time, we tried to go lower and then finally ended up almost taking high of days. So in terms of interest rates, where are we? What are we pricing in? Surprisingly, we are pricing in again a 50 basis points cut for the November meeting, and on December at 25 basis points to end the year around 4.25. I think it's quite premature to see this. We are still at 50-50 basically. And I don't think the Fed is going to pivot again 50 basis points. That certainly will signal a lot of concerns to the market because 150 basis points starting can have a justification. They can clarify that maybe it's just to start the cycle in the upfront, taking the lead on the policy and not letting data or inflation affect. Fed is taking the lead, okay? But another 50 basis points will certainly not go through that justification, and I think the markets will freak out. I don't think we need another 50. I think we are strong enough to do a series of 25 basis points until the target. Actually, the Fed in the projections are not showing these 50. So let's see what happens, but this is what is going on right now. Now let's go to the actual charts to really show you. This is the weekly, and well, after a strong week, we have certainly a continuation week, not as strong, 1.32 for the Nasdaq, and we didn't even take this pivot, and we are against the inverse fair value gap right here. And as you can see, we are trying to establish a lower high in the Nasdaq, but the ES is completely different. You can see the ES is more bullish. We even had all-time highs. So the ES is pushed by basically the small caps, which are also trying to push higher. It's certainly something, a divergence that is interesting and you should understand, because Nasdaq, the Magnificent Seven, it's getting outflows from weeks ago, and now with the 50 basis points interest rate cut that the Fed has done, the Nasdaq is getting a little bit more outflow, or not even that much inflows as all caps or the S&P 500, the global economy is getting. Nasdaq is lagging behind due to the concerns on the dollar and on the interest rates that are going to be lower. So this is the weekly. On the daily, 1, 2, 3, 4, 5 from Monday, we can see that certainly we've been struggling at the beginning, and then this was the candle of the FOMC, and then we squeezed. We squeezed and we are trying to hold in here. Hammer, I would have expected that we took this high, but it didn't happen. Not even failed. It didn't happen. So I can see a little bit more upside on the Nasdaq. And then we are going to enter the huge inverse fair value gap that is going to decide if the Nasdaq follows the S&P into all-time highs or not. This is the structure. We have to really see how the ES holds these all-time highs and really see if the Nasdaq is able to follow suit. We have to watch Nvidia, we have to watch Apple, because those are going to carry the Nasdaq if that happens. Now moving into lower time frames, we can see that on the FOMC day, we just basically chopped a lot, and then during that overnight we squeezed like crazy. This overnight was my best day in the last 6 months, almost for the year, with $6,000, $6,000 in profits before pre-market. Three big trades that I took, and I explained to you on my video. So go watch that if you're interested. And this week has been awesome, so awesome. And we are so near the big resistance that I'm showing here that I already took a big payout, and I'm planning on taking it easy for the rest of the year and trying to only take the big setups that risk reward ratio goes like 1 to 4, 1 to 5, 1 to 6. I don't want to scalp. I'm seeing a lot of kangaroo choppy style market, and on the ES, I wouldn't be like that because the ES looks stronger, but actually the Nasdaq is super difficult to trade. So if you are in the same situation, it's better for you to size down, only take the best setups. Having said that, let's go through the action on Friday, because that was pretty interesting. We were during the overnight just ranging. We have to really be patient. Be patient to see what is the target. And in order for me to understand what is the target, I usually take the 15-minute chart and try to understand what is the narrative on the Nasdaq on that day. As you can see, we have this week on Thursday that I have a quadrants on it, and I wanted to see the 50% consequent encroachment of that week. So we actually go lower, tap that, and then reverse. That was one of the best ideas of the overnight. We established here during London, we moved higher, we didn't take pre-market high, and we were certainly trying to draw the pre-market low. We did it here and we continue lower. So I was watching this zone of the consequent encroachment. This is the green line. And on the 5-minute chart, there was this order block that I have it here, and also this order block here, but this was one of the main targets. This was when the price accelerated, retested, and then went lower into my setup. So what I was watching, certainly you know my strategy, you know my setup, and it happened to be quite a decent. I was not jumping on the first signal. I happened to I was decided to jump in on the second bullish signature. After seeing this SMT down here, the Nasdaq was doing higher lows and the ES was doing lower lows. So that was one of the signatures that I wanted to see. And also this first inverse fair value gap being run through, the second inverse fair value gap being run through, and then this was, I assume this was a breakaway fair value gap with, look at this, volume imbalance embedded. So we never had the touched. So I assume that we were not going to retest that fair value gap. So I basically took the inverse fair value gap, the second one, not the first one. This would have been your first three, but I decided to jump on the second signature with more confidence. Once we held the consequent encroachment, the midpoint of the inverse fair value gap, I took this candle, and the low was actually the low of the volume imbalance, this one, for 9 points and 1 to 3.5 risk reward ratio and 34 points of profit. Sorry, I was excuse me, I was targeting exactly this pivot that was exactly the low of the order block. That was 34 points that happened in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, in 15 minutes. 15 minutes, I took $600. That's the kind of trades that you want to see. They go straight into your target, they have momentum, and they are pretty much super clear, super clear. So we pushed higher. There were a lot of fair value gaps in here, and once we touched, sorry, that was not. Once we touched the order block, then we took the overnight high, and I was just basically pretty relaxed because I was expecting exactly this. Yesterday was quadruple witching day, options expirations, and you know what happens when on those days. But look at this, because you can always see the market intention. And in this case, it started chopping. And look at the first week. If you go quadrants on that, the half point, the consequent encroachment never got a close candle. We went doing damage and damage and damage and damage. And one final damage with this fair value gap was the signal. This was the first fair value gap that happened in the 1 minute, and this was the second one. So basically, this was the breakaway gap, and you had your movement. You had your movement, and you had basically the target on the same target on the overnight, the liquidity draw on the pre-market lows, and to see if we still hold the consequent encroachment on the 15-minute wick that I was taking advantage of when taking the long here. So we were dumping, we did an SMT again, and that was looking interesting. But unless we certainly take this and hold, that was not looking bullish. Why? Because we were expecting a lot more downside. Basically, if we go to the regular trading hours, let me just go to the 1 minute on regular trading hours, really show you why I was waiting. So certainly on the FOMC day, we gapped up, and the opening range gap was so huge that we never even took the first quadrant. So anchoring that to here, the close on Thursday, on Wednesday, and the open on Thursday, we still had a lot of gap to be filled. So I left these quadrants in here, waiting for basically this on Friday, how we were going to react to that. So I had the quadrants on the Nasdaq and I had the quadrants on the ES. This was the 50% retracement. And look at this. Once the ES, which is stronger, remember on the daily and the weekly, once the ES up this and held with a push fair value gap and had displacement, I watched the Nasdaq do the same. On the Nasdaq, we never took the consequent encroachment of the range opening gap. So then I was saying, okay, the Nasdaq looks strong. Let's see if I can have a setup down here. I didn't care about all the levels. I just wanted to see the reaction down here in both indices. Inverse fair value gap, breakaway gap, and mini fair value gap. This was pretty similar to the overnight. So what I did basically is look at this beautiful entry. This candle went through the mid gap on the bullish and the inverse and immediately got reversed. We held the entire gap and also the inverse. That's pretty telling that we are certainly willing to go higher. I took the entry, the stop at the low of the candle. That's the same setup, always. 18 points of risk. And look at this, because look at these relative equal highs. I was targeting this buy side liquidity for a 1-to-6 risk reward ratio. Remember what I told you earlier? I only want to take those big setups. I don't want to be chopped out. I don't want to scalp. I just want to see clear picture of what the algo is doing. And this was a beautiful trade. Beautiful. Once I enter, immediate response. Then we got another fair value gap that respected the mid half point. Then I was just taking signatures. Look at this. We held in here another consequent encroachment. We held another fair value gap. Look at the bodies. Another fair value gap. I mean, this thing was being driven by the algorithm. This is the things that you want to see. And finally, we cleared the relative equal highs, and I just took 112 points plus, just change the electronic, 112 plus 34, it's 140, almost 3,000 bucks. This week has been awesome, awesome, awesome. Almost 8,000 only this week. And this week has been super hard, super choppy, but every single day I took the opportunity to take these kind of trades with patience, with discipline, with risk management. It's been unbelievable and I'm super happy. And when you are in this kind of state, you have to really pay yourself. That's what I'm doing. I'm taking a big payout and I'm trying to do the same next week. So where are we in terms of next week? Next week, the first thing that I would like to see, that you can see in the continuous chart, it's basically this high being taken. 20,257 on the December contract is a little bit lower, 251. So what we want to see, it's, let's go to the 15. If we want to see, look at this structure. This structure this price action was bullish. We had this week down here, we held the range opening gap on Wednesday to Thursday. So we are certainly, we certainly damaged a lot of longs here, but we should not go again down. These lows should be protected. So I want to see bullish price action starting on Monday to really see this inverse getting run through and this high of Thursday being run through, 20,000 being held, and then hunting the 251. The 251 could mean that we are now attacking the pivot, and then the situation changed quite a bit. We have a weekly inverse, and we have also the daily inverse. So I'm going to be putting in here both of them, and I want to basically have my attention in this. Let's just so I want to bring my attention to this zone. This zone is going to be quite important for next week for me, and it's the 20,500. It's also psychological, so I would expect a lot of bearish price action here. It will depend on if the ES is willing to retest all-time highs and keep going. Maybe the Nasdaq finds some kind of strength and just goes through these quite easily, but we have a lot of resistance ahead, and that's why I'm concerned about the strength on the Nasdaq, and we will see. The first thing that I want to see, as I said, next week is I want to see neither of these lows being taken out. I want these lows to be protected. I assume these lows are already done a lot of damage, and I want these lows to be protected. I want to see highs being taken and a lot of strength, because then I will be convinced that the Nasdaq wants to at least go to 204. There's a lot of other stuff that I would like to cover in terms of the dollar. I mean, the dollar is quite weak. It's been weak for months. That's pushing a lot of the indices and stocks higher. But look at this measure. Look at this candle, the quadrants. The dollar is holding the consequent encroachment. And it's holding the consequent encroachment. It's battling through that. If it holds that, and look at where we went almost to parity, 102.15. I think that's quite low. A lot of people is going to buy the dollar. So I think dollar going higher is going to put a lot more pressure into the stocks and into the indices, into equities. So that's one of the things that I'm concerned. Another thing that I'm concerned is that, well, the inverted yield curve keeps going and keeps going and keeps going, and the bomb has started ticking. Remember this: treasuries pulled back a bit, and it was a nice move, but treasuries are pulling back. Be careful with that. Another thing that is risk on is high yield corporate bonds. These guys are just risk on. This is young bonds are pretty much going straight up. Bitcoin has also pushed a bit, but it's not super risk on. And small caps are trying to hold the knife on the FOMC. So this holding in here is going to start going higher. It's going to give me confidence about the strength of the ES and also perhaps some more strength on the Nasdaq. RSP, it's basically struggling a bit up here, but in terms of objective and factual indications of strength and breadth, as you can see, we've been moving up in all three momentum indicators, trend indicators, and long-term indicators. So the overall breadth is improving with higher lows. We are coiling. And this is a signature of all-time highs. Usually, we are trying to hold, look at this price action, we are trying to hold all these previous all-time highs on RSP. So that's good. Another thing that is good is XLF. XLF is pushing all-time highs. Financial sector needs to be strong enough to support the economy. And also XLY, consumer discretionary, it's also quite surprisingly strong. If we compare XLY with XLP, consumer discretionary with consumer staples, after this failed downside, look at this move. The consumer is strong. Financial system is strong. We are seeing overall breadth increasing. I mean, the Nasdaq is struggling, but we are pretty much in a good spot. That's the summary of today's video. We are in a good spot. I think the economy is going to avoid recession and is going to have a soft land. It may not appear like that because the price action has been so choppy in these kangaroo days and weeks, but there are certainly a lot of markets that are converging into that. And that's if you have to get something from today's video, is that I think there's bullish price action in other markets. The ES is pushing. The Nasdaq is struggling a bit. That's why it's so difficult to trade. But I think we are going to move higher next week. So the 15 is not enough. So after the strong push, we pulled back a bit. We discounted the price and we are finished with the rollover. The rollover is done. All the big banks, all the institutions, all the hedge funds, all the big participants already roll over, and I think they are willing to move price higher. First, we have to deal with the 251 price. Is right here. 251 is one of the main levels that I would want to see hunt. And then we are entering a swamp of resistance, psychological level 2,500. This is going to be pretty difficult to trade. We need a big catalyst to go through this. And that's going to be the challenge this week, because the daily it's looking difficult. On the ES, if you want to take longs, and the ES just reclaims all-time highs, I would just long the ES instead. I want to trade in Nasdaq because I am so used to its movement that I'm going to trade in Nasdaq. But be really careful. It's going to be super difficult. And I think that's all. Remember that rollover is done. The breadth is quite good. Small caps and ES are at all-time highs. XLF, financial sector is strong. Consumer, XLY, discretionary is quite strong. There are a lot of indications that the economy is going to sustain. The Fed is supporting with a big rate cut. So what do you expect? Price should be going up, but control your expectations. I have already decided that I don't want these lows to be reclaimed. These lows for me are protected. So if price action shows me contrary, then I would be hesitating a lot to take any long until I see what I want to see. That's the mentality that you have to take. You have this setup, you are looking for something based on your strategy and based on your experience. Screen time, you are waiting for something. When that things appear, go hunt that. Take that opportunity. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this weekly recap every single Saturday. I go through the economic data, I go through different markets, technical analysis, I go through my own trades, and I take the opportunity to share with you my analysis and my levels. But also from Monday through Friday, I also upload single videos every single day market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that if you found this video useful, please give it a like, subscribe, support the channel. I really appreciate that. If you have any comment, if you want me to go through any other markets or any situation, please put your comment down below and I will go through them. I want this channel to be with you. So if you have any comment, just share it with me. And remember that discipline, patience, and risk management are key for your success. Stay safe, everyone. Have a nice weekend and see you on Monday.